Hi friends, are you ready to discover the untapped opportunities in India's small and microcap stocks? Alchemy Smart Alpha Small and Microcap PMS strategy does that. We specialize in discovering the hidden gems from dynamic small cap market of India with ample growth opportunities. Our unique quant plus active management style meticulously researches companies which are promising, which have high growth prospects and have solid management teams. India is a land of billion opportunities and a long runway of growth. This growth is better captured from investing in companies that morph from micro cap to small cap, then to mid caps and eventually to large caps. This whole journey has potential to create a lot of wealth and returns. From the top 1000 companies by market cap, if we remove the top 250 companies by market cap, we are left with a pool of 750 companies. This pool of 750 companies forms a universe and we call it small and micro caps. If we look into numbers, the Nifty 50 index in the last 10 years has delivered returns of close to 14% on CAGR basis. Similarly, the small cap 250 index has delivered returns close to 17%, and that in micro cap 250 index, it has been over 24%. But these are CAGR numbers. Let's look at absolute numbers. Rupees 1 crore invested in Nifty 50 index 10 years ago would have become about 3.5 crore now. But the same amount in small cap 250 index would have become about 5 crores, and that in micro cap 250 index would have become 9 crores. That is the opportunity we are talking about. Our proprietary framework is EQGP. This framework assesses the strength of market on one hand and then the strength of company on the other hand, and accordingly creates a portfolio that is relevant for that level of strength in the market. The ability to put stress on relevant factors on the basis of strength of the market is the key differentiating factor of our framework. We assess the strength of a company from three different angles: the strength of its quality, the strength of its earnings growth, and the strength of its price performance. Then we go ahead and assess the strength of the market, which in our terminology we called environment strength. The score of this strength ranges from 1 to 100. A score above 50 refers to a risk on or a bullish market, and a score below 50 refers to a bearish or a risk off market. In a risk on market, price performance or price action is given the highest weightage, followed by growth, followed by quality. In a risk off market, which is more defensive, there the quality attains maximum weightage, thereafter growth, and then price action. Let me take the analogy of cricket to explain this. A risk on market is like a full toss in a cricket match. A good batsman will ensure that a full toss is put across the boundary for a 4 or a 6. That's the time in a risk on market or a bullish market, that's the time to make those returns, and hence the highest weightage is given to price action. A risk-off market is almost like an in-swinging yorker in a cricket match. That's the time to save your wicket and not go for big shots. You can always hit that in the next ball. That's where the quality attains the maximum weightage, and we assign that to it. Let's come to the portfolio construction process. We discussed the 750 stocks that form part of our universe. Each of these stocks are evaluated for the quality strength, growth strength, and price action. And thereafter, on the basis of environment score, a weightage is assigned to each of these factors. Once I have the scores for quality, growth, and price action and their relevant weights, it's easy to compute the weighted average score for each company. I do that for all the 750 companies, and the top 25 companies with the highest weighted average score make their way into the portfolio. Because these factors are evaluated on the basis of thousands of variables, I run them on a daily basis because the data can get updated on various time frames. Once a stock breaches a particular threshold of rank, then only it's exited from the portfolio, and thereafter a new stock, which is the top ranked stock, which is not there in the portfolio, comes into the portfolio. The strategy ensures that we ride all our winners and the losers are cut short pretty early into the strategy. We are completely benchmark agnostic and with no relevance to the sector or stock weight in the benchmark. This gives us ample opportunity to emphasize on our conviction levels on both sector and stocks, and thereby the confidence to create that higher wealth for our investors. Join us in this exciting journey of uncovering those hidden gems in the small and micro cap category.